and welcome to my channel. For those new, my name is Dave and I work in financial services, and these videos are mixed in journey towards financial freedom, financial well-being, financial products, so you, like me, can reach your goals sometime in the future. Now, it's not to boast or brag or say, look at me, it's to give people hope. If I can build a sizable portfolio, you can too. If you cater plan within a pension wrapper, shall we say, or tax environment, and think long term. So, what is this video about? It's about my self-invested personal pension plan for a monthly review. Now, I do have a workplace pension, but I'm restricted on one, the contribution I can invest each month, to be pro level, and two, the funds I can pick. So I pick my own funds in a self-invested personal pension plan. So what are the aims of, shall we say, of my investment reasons? Well, we're looking for annual growth year on year of 10%. For 2024, we're looking at annual dividends of £5,500 and a year-end portfolio value of £117,000. So how have we done? Well, the start of the month, we were at 136,534. We ended the month at 138,413, so a profit of nearly £2,000. But year to date, 2024, we made 23.73%. Quick comparison, the FTSE was up 5.8%, the S&P was up 25%, so a very good year. Now, we normally make monthly contributions. Look at the following chart, £250 on the 1st of each month, direct debit, automated, simple, and we get taxed in the government as a basic rate taxpayer of £62.50 each month. Our platform provided charges fees, £17.64, which is slightly increased because it's based upon a percentage value of our portfolio. But where is the portfolio held? Well, we are predominantly UK based at the moment, 75% in UK and Europe, 22% in Americas, and 2.3% in Asian emerging markets. Now we are reducing that, shall we say, slightly away from the UK, more into Americas. And what sort of dividends did we receive during the month? Well, again, the following graphic, £250.74. Total dividends for the year of £5,644.20, £145 above what we expected, and across our shares we've got an average yield of 4.96%. So what dividend did we receive? Well, JD Sports gave us 8.25%, a small dividend but seen as a growth company. Card Factory gave us £20.11. HSBC gave us £97.38. We reinvested 12 new shares, but that pays a quarter dividend. And also quarterly dividends from Shell, £40.54, BP, £50.34, and Sainsbury's gives a half-year dividend, £34.12, 17 new shares. So a collection, a good month. We will have good months, we'll have bad months, but we exceeded our targets for the year to date. Now remember, these are my own personal opinions. I'll go for the shares and the funds in a minute. If you like the videos, so smash the like button, subscribe to the channel so you can reach a wider audience. Now let's look at the portfolios in much greater detail. So first of all, let's look at our funds. Now we've kept it simple, we've got two funds. We've got a Fidelity World Index, nearly £20,000, 14% of our portfolio. Very low fees of 0.12%. Currently it owns 1,400 holdings. Last 5 years gave it a return around about 10%, but in 2024 it was up 20%. And we did increase it, monthly contributions, we put £280 into the fund because, shall we say, we want to increase it away from the UK. Our second fund is a legal and general technology fund, nearly £18,000, 30% of our portfolio. Slightly higher fees of 0.32% and more concentrated of 250 funds or shares. But the tech sector Banking Magnificent has a great run in 2024. Let's see what happens moving forward with Donald Trump. But we can just switch off. They're giving great returns, around about 10% a year, which meets our objectives, but very low fees. But they were done for the valuation, and they're what we call both long-term holds, and we will increase them moving forwards on a regular monthly basis. Now let's dive into the shares we hold within the portfolio. Now, our funds make up 27%. Our shares make up 73% of our portfolio. Our shareholdings collectively is just over £100,000, of which 63% in the FTSE 100, 10% in the FTSE 250. We own 15 shares, 11 in profit, 4 showing a small loss. I'm not going to go through all of them, but just some major points. Our largest holding is Aviva, £23,000, nearly 5,000 shares, 17%. Very cash rich, a yield ran about 8-9%, and it did make an offer, shall we say, for Direct Line recently, just before Christmas, of 3.7 billion. So let's see what that does to the company moving forwards. But it is back on the acquisition trail. We own Lloyds, the banking group, nearly 37,000 shares, £20,000, 15% of our portfolio. Again, very good results, thanks to interest rate margins being increased, profit increase. It's very cash rich, got a yield of about 5%. We own HSBC, nearly £10,000, 7%, 1,244 shares. It was done for the valuation, but shall we say, is paying quarterly dividends, around about 5%, is very cash neutral, shall we say. We own Barclays, 3,100 shares, £8,500, 6%, and just like Lloyds, a yield around about 5%. Away from the banks, we own Drax, the BMS, the pallet maker, 1,304 shares, £8,500, 6% of our portfolio. Again, got a nice yield around about 5%, a long-term hold. We own Greggs, the bakers, 292 shares, £8,000, 6% of our portfolio. It makes, shall we say, a very nice profit, very cash rich, but it has been expanding away from the high street, but more, shall we say, service stations, retail parks, late night opening train stations. So it is, shall we say, expanding, and it has, shall we say, increased its menus. Early breakfast menus have been changed, late hours have been changed, but it is, shall we say, growing company. And then back on, shall we say, the insurance companies. We own L&G, 2,248 shares, £5,000, 4% of our portfolio, but a very cash-rich company. But it has struggled. It's one of our shares that is showing a small loss, but we've done it for a reason. Let me say, it's paying a very nice yield. We can just switch off. Now we also own Sainsbury's, 1,300 shares, £3,500, 2.6% of our portfolio. Did give us a nice dividend during the month. Has been increasing profit share, and hopefully a very nice trading statement after Christmas at the start of January. But everyone needs food, everyone needs to eat. We do own, shall we say, JD Sports, a growth company, 2,500 shares. It was up 100% since we bought it, has made £1 billion profit, but has been affected, shall we say, by cost of living crisis in America and the sales moving forwards. But it's a growth company, £2,500, 2% of our portfolio, but it is making profits over £1 billion, and it has been buying companies in Europe and in America as an expansion. We also own, shall we say, Shell and BP, nearly £4,000 in Shell, £2,000 in BP, but as we proved in the month, they do pay some nice quarterly dividends. Now, some smaller companies we own is Card Factory, the retailer, pays a nice dividend. We own AJ Bell, the platform provider, AG Bar, the drinks provider, shall we say, or producer, and Pennon, the water company, which has struggled. But we've done it for a reason, but it has struggled, shall we say, because of the off-pot scenario. But we've done it for a reason. Remember, they're all what we call safe, secured companies. They've been here for many years, they'll still be in the future. It's not a get-rich portfolio, but it meets our objectives, and they're my own personal opinions. Remember, the aim is not, shall we say, is a get-rich-quick company. Okay? It's a long journey, but it just goes to show you can build a sizable portfolio if you invest on a regular basis. You reinvest all dividends within a tax-free wrapper. If I can do it, you can do it. And remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.